This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we're going to talk about how a legitimate claim was destroyed by the insured creating fake invoices to increase his recovery, and why, therefore, it doesn't pay to try to cheat your insurance company. Sigismondi Foreign Car Specialists, Incorporated, appealed the U.S. District Court's summary judgment in favor of State Auto Property and Casualty Insurance Company on State Auto's declaratory judgment action and statutory insurance fraud claim. In State Auto versus Sigismondi Foreign Car Specialists, a U.S. Court of Appeals for the Third Circuit decision of November 18, 2022, the Third Circuit dealt with the allegations of the insurer that Sigismondi attempted insurance fraud. State Auto had issued a commercial insurance policy that provided coverage for Sigismondi's car repair shop. Sigismondi requested an insurance payment for water damage, but State Auto denied the claim, citing fraud. The misrepresentations asserted as a defense by State Auto occurred during the claims adjustment process. Sigismondi and State Auto retained adjusters to value the damaged inventory. The adjusters first created a joint inventory, a list of all the damaged items for which Sigismondi sought insurance proceeds. State Auto's adjuster, Chad Foster, then researched prices of the same or similar products to determine either a replacement value if Sigismondi replaced the item or an actual cash value if not. Sigismondi's adjusters, or Sigismondi itself, likewise valued the items. Sigismondi valued certain items higher than Foster estimated or could verify. Sigismondi presented what appeared to be original invoices from various vendors trying to convince State Auto to pay more than its adjuster calculated. In truth, Sigismondi employees had scanned at least some of the invoices into the computer and then used editing software to change the items and prices listed by the vendors. After Foster alerted State Auto of this issue, State Auto sent Sigismondi a reservation of rights letter requesting further documentation and highlighting a policy provision stating the policy would be void if an insured intentionally concealed or misrepresented a material fact concerning a claim under the policy. State Auto subsequently sued after further investigation confirmed the alterations. It sought a declaratory judgment that the policy was void. It also requested damages for statutory insurance fraud. Sigismondi counterclaimed for statutory bad faith. At the summary judgment stage, Sigismondi initially claimed its misrepresentations were not material. The district court determined the misrepresentations were material and granted summary judgment to State Auto on its declaratory judgment action and statutory insurance fraud claims. On appeal, Sigismondi contended that it did not knowingly or in bad faith provide false or misleading information by submitting the altered invoices, and that the invoices themselves were not in fact misleading. The company argued it submitted the invoices only to allow the adjusters to identify items and vendors, not prices. Sigismondi insists this should have been clear because the invoices were dated after the water damage incident. It was hard to imagine, at least for the Court of Appeal, how the invoices, which were doctored to include prices that did not come from the vendor, were anything but knowingly made to include false or misleading information. A fabricated receipt created by a consumer and presented as an official document from a retailer without the retailer's knowledge constitutes false or misleading information. Sigismondi also argued that any misrepresentations were not material because the invoices would not be the final word on value. Foster would conduct his own inquiry into the prices based on the items and vendors. Sigismondi provided the altered invoices in response to a request for invoice support or other documentation for the value claimed. Its argument that the invoices to which it added prices were relevant only for information about items and vendors is contradicted by the undisputed evidence of the invoices themselves. Because this exchange of information was part of an effort to determine the value of the insured items, the falsified invoices that indicated prices charged by vendors were undoubtedly material. Reviewing the record in the light most favorable to Sigismondi, the Third Circuit concluded that the altered invoices were material, and the affirmance of the declaratory relief in favor of state auto doomed Sigismondi's counterclaim for statutory bad faith. Because the policy was void, it did not cover Sigismondi's damaged inventory. It followed, therefore, that state auto cannot be liable for bad faith denial of the claim, and the judgment was affirmed. In my opinion, insurance fraud like that attempted by Sigismondi is fairly easy to prove, since the invoices and receipts presented were not originals. The insurer merely had to have its adjuster or SIU investigator visit the various vendors to either affirm the authenticity of the invoices or establish that they were prepared in an effort to defraud. State auto did just that and proved to the court and the Third Circuit that fraud was attempted. Although Sigismondi had incurred a proper loss, it recovered nothing because it tried to cheat, and when caught, argued it really didn't intend to defraud. The Third Circuit looked through the specious arguments and ruled against Sigismondi and in favor of the insurer. This video was adapted from my blog, Zalma on Insurance, which is available free to anyone who clicks on the URL zalma.com/blog. It's also available on YouTube and rumble.com as a video, and you can subscribe to the blog or to either of the videos or both. And you can subscribe, if you desire, to my locals community and my Substack publications. If you found this video to be useful to you, please tell your colleagues so that they can also subscribe to the videos and to the blog. Thank you for your attention.